I would say time. It just takes time.
It's a patience game.
Yeah, like as much as Bitcoin is time and money is time, for this to happen, it's a very, very patient game, because all the things that don't work, eventually they fail, right? Every time we've had a fiat currency, it has failed without question. And so this current system we're in is a short-term game for a lot of people to make a lot of money, and of course they're going to have a great life, but eventually the whole system does come down. There's the other side, there's a transition. There's a transition into a digital age that's happening. Probably both things are going to happen at the same time. But it's just time, from a market perspective, who's going to buy it, who's going to sell it. I can't get around the fact that we can't break through a ceiling. Maybe it's a glass ceiling, but there is a ceiling there, and that ceiling doesn't disappear until what's holding it up collapses.
Renowned on-chain analyst Willy Woo has made his Bitcoin prediction for the year 2024. For those unfamiliar with Willy Woo, he is a veteran on-chain Bitcoin analyst based in New Zealand, boasting over 1 million followers. He is credited with pioneering many of the on-chain analytics widely used today. After a hiatus from the Bitcoin scene lasting over a year, Willy Woo has returned with his outlook on Bitcoin. In a recent Twitter post, Willy shared his forecasts for Bitcoin in 2024, anticipating a period of considerable volatility with both upward and downward movements, and the possibility of turbulent times ahead. However, he holds optimism for 2025, suggesting it will be a more favorable year for Bitcoin. Additionally, during an interview at the What Bitcoin Did live show in Sydney, Willy emphasized the significance of time for Bitcoin's evolution. He pointed out that throughout human history, every fiat currency has eventually failed, underscoring the notion that Bitcoin's primary requirement for success is time. In a captivating revelation, Willy also discussed why he no longer subscribes to the traditional 4-year Bitcoin cycle, offering unique insights.
Yeah, it's you might not want to hear this really as Bitcoiners. There's a measure in the finance world called Sharpe ratio, and that really just is measuring risk, like how volatile is your returns over time. Like you're looking at your returns, and we love it. It moons. It's like crazy. We're going to beat every asset, but how much risk are you taking in the volatility of your returns? And Bitcoin was killing it. It beat every other asset on the planet. It was like 3 to 4. That's very high. Now it's dropped down to around 2-ish, something like that. But the thing is, it went like this, and then it went in step change, like this. And where we are right now is actually converging onto every other macro asset on the planet, similar to equities, similar to gold, bonds, emerging currencies. This is like all macro assets trade within a range, and Bitcoin just entered that, and it dropped. And it wasn't like zzz, it was like zzz, boom, boom, step change. And that happened 2018, 2019. And the question is, what happened in 2018, 2019? It was the financialization of Bitcoin. We had the perpetual swap, we had calendar futures, paperization of Bitcoin. I can sell, say if I'm the US government and I can print, I've got $20 trillion of capital out there, M2 money supply. You can make policy, you can print more money, you can incentivize particular markets. And the reality is Bitcoin's, maybe $500 billion asset. There's 21 million Bitcoins associated with that. If I print $1 trillion, I can sell for $42 trillion Bitcoin. So this is the issue right now, is we've got paperization of these markets, and Bitcoin's traded like any other macro asset on the planet. And I think that's a big worry for me. We're talking about a spot ETF. Okay, we can buy up to 21 million. We're actually 1 million probably, because that's what's available. But in the meantime, you've got these paper markets that have huge ability to control the market. And so,
Well, explain how that's happened then. So are you saying that is bad for you as a trader, or do you think that is actually bad for the asset itself?
Well, Bitcoin's hope, right? How do you create hope for the world, right? When the world economy is $100 trillion and this asset is $500 billion. It's $500 billion. Say we've got El Salvador wanting to adopt it as the nation state currency. If we want more people to exit the system, this pool of capital is not big enough for it to be serving larger countries. So it does need to expand. Bitcoin needs to go to the moon. We like it because we hold it, but actually for the greater good, we need this asset to get bigger. And now we've got a mechanism, not we, but the system that we're in has a mechanism to tame that down, because you're competing. I'm backing the US dollar because I'm the US government, or I don't know, I'm whoever it is that has an incentive for whatever it is. If it's the US dollars, I want the US dollars to grow for whatever reason, and I want Bitcoin to come down. Like the IMF does not like El Salvador going on the Bitcoin standard because it's against their incentives. So it's really important Bitcoin gets bigger. And right now we've got a lot of headwinds. And the spot ETF is great. Maybe we can unlock demand from very liquid markets, from a lot of people wanting to buy into it with some amount of capital. But there's a systemic problem right now because there's a lot of headwinds. I think that there's when it's neither one or the other, right? It's like if you come in as an analytical viewpoint, you're going to go, what are the inputs into this box, right? And it used to be halvening because you've got this demand coming in. It's an adoption S-curve. Like people are coming in at such a scale that it's pushing it up, right? And we're at a point where we're maybe in the Western world, I think it's around 15 to 20% of investors may have exposure. And then it goes like that, right? To capture, this is 100%, this is 0%, you're doing this S-curve. And there's that equation coming in. And then you've got this halvening that happens, which is like the miners are mining, sell, because this inflation is dumping on the market. And then it's where does it all fit in? And the interesting thing, right, for me, is like we've always said 4-year halvenings. And we moon after every single halvening because the sell pressure halves. But if you were to look at macroeconomics and liquidity, it's also on a 4-year cycle. And guess what? It's superimposed on the Bitcoin 4-year halvening. It's the government injects, the world economy injects liquidity every 4 years. You can chart that.
I've seen this chart. I don't know if anyone's seen it, but essentially, the period of the halving correlates directly with periods of an increase in injection of liquidity into the market. And nobody had shown me that before, and I saw it. And I even saw somebody tweeting last night is, don't expect Bitcoin to moon without an injection of liquidity into the market. Which is leading which though?
Sorry? What was
like do you because I don't think when you look back at, say, the first halving, that even if it correlated on the time scale, I don't see it related because I don't think people thought of the asset then in the same way.
I want to go back to like the launch of Bitcoin. Bitcoin was launched at the perfect time, right? We had the world financial crisis. No one trusted the banks. The whole thing was perfect. It was like Satoshi released it post world financial apocalypse, saying this is an alternative. What did the world economy do? What did the bankers do? Is that they had to save this economy. So they injected massive amounts of capital. And that 4-year halvening, their cycle is every 4 years. There's an injection of capital. I don't know why. I don't know why these cycles are 4 years in the macroeconomy. I know why it's in the Bitcoin, because it was set programmatically, but they superimpose. But the key is right now is that this injection of capital on the macroeconomy is happening, and the halvening is weakening in power. And as the Bitcoin halvening weakens by 50% each time, right? there's also this other dynamic inside our own industry, which is the Bitcoin trading, right? We used to trade just Bitcoin. Now we trade paper Bitcoin, like we were saying before. I could buy 100 million Bitcoins if I had the collateral. And if BitMEX could allow me to do 10,000x leverage long, I could put in one Bitcoin and buy 10,000, right? So you could buy near infinite amounts of Bitcoin. And that creates a huge amount of trading volume. And this amount of trading volume is you can see it already. The spot markets where you're trading the real Bitcoin is very low compared to the paper markets, very liquid. And so let's get away from the volume, but think about what the exchanges are doing. They are making a little fee on top of every single trade, and that accounts for multiple billions of dollars every year. And what do they do with that is they make money, they sell the Bitcoin so that they can pay for the infrastructure, their staff, and so forth. So as this economy is getting more mature, you're getting fees harvesting and dumping. And as of the last halving, they were equal. The Bitcoin miners were selling some amount of Bitcoin, and the exchanges were selling the equivalent. The next halving, the exchange is going to sell more than the miners. So you've got the halving sell price reduction is not instrumental. It really comes down to macroeconomy. And so I said in the last cycle, probably a bit premature, but I said that was the last cycle. And then we had a bear market. But I think that it's going to get really noisy here on in, and we won't see these coherent cycles anymore. I would say time. It just takes time.
It's a patience game.
Yeah. Like as much as Bitcoin is time and money is time, for this to happen, it's a very, very patient game, because all the things that don't work, eventually they fail, right? Every time we've had a fiat currency, it has failed without question. And so this current system we're in is a short-term game for a lot of people to make a lot of money, and of course they're going to have a great life, but eventually the whole system does come down. There's the other side, there's a transition. There's a transition into a digital age that's happening. Probably both things are going to happen at the same time. But it's just time, from a market perspective, who's going to buy it, who's going to sell it. I can't get around the fact that we can't break through a ceiling. Maybe it's a glass ceiling, but there is a ceiling there, and that ceiling doesn't disappear until what's holding it up collapses. And so it's patience. I can't see us having a strong American government with a strong US dollar and Bitcoin becoming the world reserve currency. Diametrically opposed. So we're in a rock and a hard place.
So your belief is that we need a failing US dollar for a successful Bitcoin? The current incentives is, the US dollar is going to defend the US dollar. The US government is going to defend the US dollar. And so maybe it'll be like a whole lot of new experimental countries coming out, El Salvador, Singapore's, Dubai's, and then, that'll take time as well. And then you have this sort of soft landing. But, you should talk to some geopolitical expert, not me. I'm just just my view. It's not expert.
Willy Woo's perspective on Bitcoin's trajectory in 2024 and beyond offers a thought-provoking alternative viewpoint. Unlike many who anticipate a bullish year in 2024 due to factors like the expected spot ETF and the approaching halving, Woo suggests that the real growth for Bitcoin might be seen in 2025. He draws attention to the historical trend where Bitcoin experiences significant surges in value in the year following a halving event rather than immediately during the halving year itself. This historical analysis prompts us to consider the potential for Bitcoin to follow a similar pattern in 2024 and 2025. While some may hold optimistic views for Bitcoin's performance in 2024, taking into account different perspectives like Woo's can provide a more comprehensive understanding of the cryptocurrency's market dynamics. It's essential to keep in mind that cryptocurrency markets are influenced by various factors, and predictions can vary widely among analysts. As we move closer to 2024, the cryptocurrency community will eagerly monitor developments and price movements to see how the year unfolds for Bitcoin. If you have your insights or predictions about Bitcoin's future performance, please feel free to share them in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.